It's about that time of day again. My name is Joseph. Tuesday evening, March 13th. Welcome back to your nightly newsletter. We're covering crude oil, S&P, Nasdaq, gold, and of course, we can't forget about the mighty euro this evening. Starting off tonight, crude is bearish with a spike in range pattern. That tells me to use the 2-try rule for selling opportunities up above the high of the range tomorrow. S&P is also bearish, had an undershoot of a bear channel, so I'm going to switch it up to a spiking channel and looking for selling opportunities off the highs of that channel tomorrow morning. Nasdaq also bearish. Nasdaq has a spike in channel pattern, and that tells me to look for traps up above resistance swings for a leg lower tomorrow. Gold is bullish, right? So against the Emini S&P, gold is bullish with a retest of a key spike in channel resistance level, and that tells me to look for buying opportunities back down at support levels tomorrow. And of course, we'll have the euro tonight. The euro is bullish with a channel pattern, and that tells me to look for buying opportunities down near the lows of that channel tomorrow morning. We're looking at crude, S&P, Nasdaq, gold, euro. I got a great newsletter in store for you guys and gals tonight. We got a bunch of good strong trends setting up for tomorrow. We got some big channels, some spiking channels, some undershoots, and a great example of a spiking channel retest on gold. There's a ton of learning opportunities tonight and hopefully earning opportunities tomorrow with the strategy that we put together tonight on our newsletter. Before I jump in, though, and put the plan together for Wednesday's session, I want to remind you, if you're on YouTube right now, you can find a detailed description of the entire strategy on my blog at sidewaysmarkets.com. I'll leave the link in the description of the YouTube video. If you have any questions about anything covered in this video tonight, please remember to post them in the comment section below. And if you like what you see, please help support this YouTube channel by subscribing and make sure you hit the bell icon so you get notified every time I post another video. And don't forget, in the description of the YouTube video, there's a link that will send you over here to our blog at sidewaysmarkets.com. Grab that link. Come over here and watch the video on the blog at Sideways Markets. This is where all the action is. You know, for example, you can join our mailing list. You'll never miss another newsletter, another psychology video. You'll never miss a beat. Join that newsletter. I'll make sure to send you an email when anything new arrives here at School of Trade. Also, don't forget, I'm always posting exclusive charts, links, updates, and everything that is SOT in the world of day trading to all of my many social media channels, right? You can't find that information anywhere else. Make sure you follow me on social, lower left-hand corner. And speaking of charts, how easy is this? All the charts from tonight's video, you can have them on your computer for tomorrow's session, right where it says click here to download today's charts. Grab those charts and be ready for tomorrow. And speaking of tomorrow, I got a free pass for you, right? Don't do it alone. Come out and join me tomorrow as a guest in the trade room. Grab that free pass in the upper right-hand corner and come see how we trade here at School of Trade. And don't forget, if you have any questions, don't forget you can post them in the comment section below the video, or you can always hit me up on live support. I'm always here to answer all your questions 24/7, 365. All right, let's jump right in. We got a busy day tomorrow. Tomorrow's Wednesday, the 14th of the month of March. We are almost halfway through. What is happening this month? It's just flying right by here. Tomorrow's the 14th of the month. I can't believe we're already talking about the halfway point of the month of March since we just got here just a few days ago. Bottom line, though, is tomorrow is a Wednesday. So we know that right off the bat, we know tomorrow is inventory day for all you crude oil traders. Don't forget, the news report tomorrow at 10:30 means the best trades on oil happen before 10 a.m. Eastern time. So keep your eyes on the time clock tomorrow morning. Outside of that, we get some big inflation numbers tomorrow, right? The PPI number. We saw how much that inflation number moved things around this morning. I gave you guys a warning about that, and we definitely saw a lot of action at 8:30 this morning because of that. We get some more producer prices, right? That PPI number tomorrow, another inflation number at 8:30 a.m. Eastern time. And then we also have that big retail sales number tomorrow too. You know, everyone's battling Amazon right now, and everyone's trying to see what's going to happen next. So that retail sales number is definitely going to be a market moving event as well. So we have quite the 1-2 punch tomorrow morning at 8:30 a.m. Eastern time with retail sales and PPI, and then of course with the petroleum status report, right, for all you oil traders. The one thing, remember, right? Get to those trades early. I'd never recommend trading during the news. I always tell my clients, get to the trades early on a Wednesday, right? There are so many other times during the week you'd be trading crude, and there's so many other patterns we get every day on other markets that you don't really need to go forcing trades on oil during the least reliable time of the week. So 10 o'clock Eastern time tomorrow, get at them early. And don't forget, we're going to go over the entire plan here tonight, and then we're going to execute this plan tomorrow morning at 8 o'clock Eastern time in our trade room. Let's jump right in. We got a lot to cover here tonight. Trying to get this video out as quickly as I can here every evening, and I appreciate having you here with me this evening. Starting off tonight, we'll go crude oil, then over to the S&P, then the Nasdaq, then we'll do some gold, and we'll wrap up tonight on the euro. Crude is bearish with a spike and range pattern ahead of tomorrow's weekly inventory report. The bears have control, and this triangle or range tells me that sellers are rejecting the idea of selling at lower prices. So my plan is to focus on selling at higher prices tomorrow, and I have my eye on that hidden channel resistance level overhead for a move back down, and most likely an easy test to that $60 round number. And then, of course, we also have a larger measured move here, right, that has to be adjusted here as well. So real quickly, we can see the market is definitely bearish. We can see the market tumbled here this morning, right? But you'll also notice, though, whenever we see a market go straight down like that, what usually happens? Yeah, two-legged pullback and a retest of the low. Well, you'll notice they didn't get a retest of that low, did they? No, they did not, right? So what usually happens here didn't happen, right? It didn't happen. So what that tells me is that sellers are in control, but obviously the fact that we didn't even retest that low, that definitely tells me that sellers are either weary of selling low, right? Or maybe the sellers have given up on this and maybe it might be turning bullish. Now, we don't have enough information to call this a bull market yet, but that is a viable option for tomorrow as well. So strong move down, two-legged pullback and a retest of the low. That doesn't happen. We see some big wicks, some big green candles, and of course, that gives me a higher low. And of course, we see some lower highs. Moving average flattens out. What is that? That's a triangle. Now, triangles are basically just like trading ranges. Anytime I see a strong move down, we go into a range, or whether it be a triangle, it doesn't really matter. Potato, potato. It's the same thing, right? We go sideways here, whether it's a triangle or range, then we know the bears have control, and I want to focus on selling up above the high of that range. And to do that, I want to use what we call the 2-try rule. I want to look for a breakout. Breakout going higher. That's the buyers trying once. We're seeing that right now. I want to wait for a pullback and then wait for those buyers to try a second time, right? That creates the, wrong color there, Joe. That creates the second try, right? So now we have the 1 try, the 2 try, right? I like to see those buyers try twice above that range. It's called the 2-try rule. And there are lots of different ways we use the 2-try rule. Whenever we have a trading range like this, that 2-try rule goes up above the top of that range. And then I'm looking for the turn. I'm looking for an opportunity here now to see those buyers start to fail and dump back down into that range. And that's the plan, right, for tomorrow. Now, hopefully, we can find some resistance up here, right, because I always like to make sure I sell at resistance. I know this is a very basic rule, but you'll be amazed at how quickly your trading will improve if you just try to focus on selling at resistance in a bear market instead of selling at support, right? I know it sounds very obvious, right? But you'd be amazed at how difficult it is when the market's moving quickly, when there's money on the line. It's difficult to follow that simple rule, sell at resistance. So again, we get that strong move down. There's the range. Again, you can call it a triangle, call it a range, whatever you want to call it. I want to see this thing go up. Here's once. Try to pull back. There's twice, right? And then hopefully I can get this trend line to come in, right, and use that trend line. Now, where is that trend line coming from? Oh, it's coming from these 2 lows, right? Those 2 lows. I call these hidden channels, right? I learned this trick a long, long time ago from a mentor of mine. And of course, with that lower low, right, those 2 lows, pop that right back up here at the highs, and that, of course, is included along with this level of resistance coming off that little tiny doji, right? So, you know, in all reality, this whole area here could be considered that battle zone, right? This whole area here could be labeled, right, as that as that battle zone. So as of right now, we get the first try going higher. I want to see a second try going higher and then try to get that market right back down to retest that low. So we know the bears have control. What if price goes up? Price goes up. I want to see it one try, two try back down. If price continues to go sideways here, well, then not much changes. We'll still wait for that one try, two try back up again. If price goes lower, right, here's where things get a little bit more challenging. If we don't get the sell here, or maybe we do get the sell and then tomorrow morning, right, we're gunning down here, right? At that point, now where do we go looking right from there? Well, at this point now, depending on do we hit the top of this channel or not, right? So let's say, for example, right, we end up going back to the top of that channel and now we're going lower. I'm going to be looking for selling opportunities now as we go lower down to finish off, right, that channel rotation. Okay, so if we do end up going up, finishing that high, and then come collapsing back down, I'm going to look for that moving average goes lower, and then look to complete that sell down to the low of that channel, right? It's just called channel rotation, looking off that high down to that low. Now, another thing to consider here for tomorrow, as I zoom out a little bit further here, I need to adjust this measured move. So give me 2 seconds here. I'm going to go click, click, and click. So this is roughly where that measured move will be, at least at this point, right, down at that 59.28 area. Just keep in mind, if we go higher here, obviously that measured move gets adjusted higher here as well. All right, so now at this point now let's just say we go up, one try, two try, and we make a run, right, make a run back lower. This will now turn into, right, a bit of a wedge. Right, a bit of a wedge. So again, I'm looking for those selling opportunities as we go lower, as I mentioned earlier, but at the same time here, you're going to be careful not to chase after it too far, right, and then look for that move, right, back up to that high, and that's where we look for that sell, right, going forward tomorrow, right, so possibly a wedge on the way down, right, to that measured move. So 3 scenarios, up, down, sideways, we got those covered. Now how do we turn bullish? Yeah, good question. Tomorrow's an inventory day, so anything is possible on a Wednesday inventory day. And a lot of times what happens is on those few hours leading up to the inventory report, the market will completely reverse directions just to, what it almost feels like is just to give, right, the trend followers a bigger profit. For example, we may see tomorrow morning, right, this market turn bullish. And it may turn bullish until the news comes out tomorrow, and then it may go right back down where it came from. It's amazing how the market feels like it's rigged like that sometimes. But if you understand how liquid these markets are, you can't really, it's difficult to hold back a market that long, right? You can't really, even Goldman Sachs can't keep the price of oil from going up or down more than a few seconds, maybe a few minutes, right? They can try their best, but they need a bigger bazooka for that, right? And long, right? They need a lot of contracts to do it. So I'm not going to say you can't kind of flex your liquidity muscles, a big bank like Goldman Sachs, right? Or, dare I say a group like OPEC, right? And they've been trying pretty hard to do this for a long time, right? It's amazing how inventories, it almost feels like if the market is bearish, right? It almost feels like sometimes the couple hours leading up to it, right? We see that reversal, then it just comes slamming right back down, almost as if just to put this thing on a tee and let sellers just whack at it, right? Almost as if to set this thing up for the bears to make a killing on it. So tomorrow we may see a reversal. How does a reversal look? What are the 3 things? Strength, pullback, strength, right? Strong move up. If you set strong move up, it's strong move up, looking to hold that pullback. Okay, now this obviously is not drawn to scale here, right? It could be as simple as, right, strong move up, hold the pullback, right, and go from there. Once I see those sellers hold that pullback and start exploding higher, right, now I know this is a bull market. Once I see that, then take these highs, line up those highs, bring it back to that low, right, and that's going to give you now that sweet spot. It'll be right somewhere between the high of that first swing and the low of that channel right there. Beautiful buying opportunity using a reversal into a hidden channel, and again the objective will be back up to that 61.97, and then possibly, right, all the way back up obviously tomorrow if we get a bigger move higher, right, back up to retest that high from yesterday's session at 62.33. It's also worth mentioning as well that we're getting closer to the rollover. I am watching here tonight on oil. Oil is kind of a unique market in the sense that it rolls over every 1 month, and because of that, we get a lot of sharing of volume. I don't want to get too off topic here right now, but the reality is as we get closer to the 18th of the month, typically it's around the 18th of the month, we're going to start seeing that volume roll forward to the 518 contract. Right now, if you look at the contract volume, right, total volume is now on the 418, right? There's more volume on that 418 contract, but it's only about twice as much. So you can see we're starting to prepare for rollover here. It won't be tomorrow. It probably won't even be Thursday, but start watching that as we go into the end of this week. We may get a little bit of an early rollover on oil. So just going to keep that in mind as we keep going further into this third week of the month of March. All right. So we know the plan for tomorrow on the oil. Let's keep rolling here now over to the S&P. S&P is bearish after an undershoot of a bear channel, which I can now safely assume is going to be a spike in channel pattern. Knowing this, my goal is to find selling opportunities up at resistance levels near the high of this spike in channel for a target down at the measured move for tomorrow. Now, you can see in the chart right now, I have this marked up right as a spike in channel. We see a strong move down, we pull back, we make a new lower low, I connect these two lows, that creates this channel high, right? This is pretty much how you draw a spike in channel. Now, I want to kind of walk you through this though, because I want you to see an example of what we saw earlier in the session. Okay, when we made this strong move down earlier, right? This strong move down earlier, that strong move down was a reversal, right? It was bullish at the beginning of today's session, right? So as we come out of that reversal, what do we always talk about in the newsletter? Hidden channel, right? So I took this low, you take that low, line that up, right? Put it up at the highs, yeah, and where do they come in to sell? Right at the top of that channel, right? I'm not making this stuff up, right? You can see for yourself. So the reality is we already know that all the bears, right, they got fat and happy off that hidden channel, right? And a beautiful example of a buyer failure up above the moving average, right? So beautiful, beautiful trading here in the afternoon, right, on the S&P. What I want to bring your attention to is that if you draw that channel like this, right, there's your sell off the high. Again, that was earlier on in the session, but here's the important part. The important part is we're now back to the high of that channel again, but we never got to the low of the channel. And remember, the best way to use channels is to look for rotation. So we get the high to the low to the high. The high should go back to that low, but we didn't, right? You can see what happened, right? Bunch of big wicks down here, bunch of green candles. So we really shouldn't be back to that low, back to that high, right? That tells me something went wrong down here, right? For whatever reason, it looks like the sellers are a little bit tuckered out down there. So now I don't want to rely on that channel, right? That's why I'm not saying sell right now, right? That's why I wouldn't recommend to use that as a channel high, right? Because it's just, you can undershoot. So if I take the undershoot amount and I project the overshoot, right? In other words, the amount that we didn't rotate, and I put that back above the high. Another way to do this is to use that channel, right? So rather than doing it this kind of the sloppy way, right? Do it a little bit more reliably. Connect these two lows now, right? And now that gives me a chance here to kind of capitalize on that undershoot into overshoot. So it pretty much does the exact same thing. And it looks like we might be setting up here for what I call a two-legged pullback, right? Up into that battle zone overhead. So that's the goal for me tomorrow on the S&P. Get up around the high, get up around levels of resistance, because honestly, I don't trust this level of resistance we're sitting at right now. I might be wrong, but if you're a day trader, you're wrong oftentimes more than you're right. It doesn't mean that we're taking trades every time we think that, right? But, I'm always kind of thinking, here's what I think is going to happen next. And when I do see it materialize, we'll take the trade, right, for that. It's okay to be wrong about your assumptions, right? We wait for the times we're right, and we jump in on those trades. So bottom line is, we have that lower low. We have a spike in channel. You could call this a kind of a hidden channel with an undershoot into an overshoot. it doesn't really matter how you slice it. We had a great looking resistance trend line overhead. And I know that's a little bit complicated, so I apologize if that went over your head a little bit there. Not to worry, I teach all this stuff in our beginner, intermediate, and advanced classes here at School of Trade. I also have this measured move, right? That measured move obviously is right below us, right? At 27, we'll say 55 area. So that's going to be a key level of support, right, as we go lower here. So the plan is pretty simple. What if we go up? What if we go down? What if we go sideways? Going higher here, I'd like to use this trend line, right, and kind of use this now as a two-legged pullback, right, up into that battle zone. Now that will bring the moving average over. Oh, sorry, wrong color. That will bring the moving average over, right? Moving average comes over now. Buyers want to buy the pullback to the moving average. Okay, we know where their stops are. That fails into strength, strength into pullback, right? And pullback going back down to that low, right? So these are basically three different opportunities here if we can get back up into the battle zone, right? The first one, of course, being a two-legged pullback, using that battle zone and using that trend line as resistance. The second one being a buyer failure, right, going back down below the moving average. And the third one, right, third one, by the way, being the most reliable of all of these three, is where we see the buyers clearly fail. They show up on strength to the downside, and we sell the retracement, we sell the pullback, right, back to that moving average. So that's an easy plan if price goes higher here. It may also just jump up, moving average, right, failure, strength, pullback, and back down, right? Very, very simple there. Okay, what if we go sideways? You know, like I said earlier, maybe I'm wrong about this. Maybe we can sell off this high. What if price goes down, then bounces off that low? Right? We should go back to that low at the very least. But what if we bounce off that low? Yeah, if we bounce off that low, now let's call this a range. And pretty much the same thing's true, right? We talked about this earlier on the oil, right? Whenever I see a trading range, now it's one try, two try, back down in, right? Two try rule above the top of that range, back down in to sell back down in. What if we keep going lower? Right? What if we keep going lower here? If we keep going lower here, right? Keep going lower. If we keep kind of grinding lower, if we end up kind of grinding this thing lower here around that measured move, I don't want to sell into that measured move now. I want to focus on selling at resistance, not selling at support in a bear market. I'm going to put those swings on, and I'm looking for traps. I'm looking for failures, strength, and pullbacks back down again, right? Traps, failures, pretty much the same plan, right? If we go lower, I just simply don't want to sell low, right? I want to sell high. I want to sell at resistance. You get fewer trades doing that, but you know, this is not a game of the number of trades, right? This is a game you win by fewer trades, more profit. And so I always tell my clients, get used to the fact that by doing things the right way, you're not going to take as many trades as you did before. But don't be surprised when your profit and loss, when your account starts to grow, right? You trade less often with more reliable patterns, and all of a sudden your account starts growing like a weed, and that gives you more confidence. That confidence allows you to be disciplined, right? And that discipline cycle, right, just continues to make your job a whole lot easier. So what's the last step? How do we reverse? Well, same thing as we did on crude oil, right? Want to see a strong move up, pull back to the moving average, right? And then explosion going higher, right? You need to see some real good strength here if we're to call this a bear market, a bull market. Then we go, of course, draw that trend line up, draw that trend line down, grab that hidden channel. It'll usually be somewhere between the top of that first pullback and the low of that channel, right? That's kind of your battle zone there, right, for the buy side. And as you can imagine, the objective is to go back up and retest that 28.07 and a quarter. All right, guys, really, really good example here of an undershoot into an overshoot. Get that measured move waiting for our targets below. Should be a great day tomorrow on the S&P. And of course, over to what looks like the S&P, right? Kind of like a look-alike market here. The Nasdaq, right? Nasdaq is bearish with a spike in channel pattern, and that tells me to look for selling opportunities up at the highs of the channel tomorrow morning. Anticipating this move higher now, price will likely be above the moving average. So I'll be looking for traps and buyer failures for a move going back down to retest that low. And again, as you you can see here, that measured move is waiting conveniently right at that big round number at 7,000, right? So look for that to be a nice big magnet here for those bears tomorrow on the NQ. Got that strong move down, right? That strong move down. What do we expect? Yeah, a two-legged pullback, right, and a retest of that low. This one, as you can see, right, wasn't as perfect. If you mark up that low right up to that high, it definitely wasn't as perfect as the S&P, but it gave you a good area of interest there, right? Gave you a good area of interest. And by the way, if I leave that channel on there, right, that'd be your hidden channel, right? When you saw the market with bullish to bearish, you knew you had to find a hidden channel there, right? Find that low, off that low, up to the highs, fits perfectly off that high, right? So you knew you're looking for those sellers up there, right? Beautiful example here of that one try, two try for the bulls, right? That's the recipe for success, right? One try, two try for the bulls, strength, pullback, and gone. You can see that pattern happens over and over again. Now, just look at this channel. What do you see? It's staring right at you, right? We talk about this all the time, right? It's called a grind break, right? It's called a grind break on it, right? That grind break, what does that mean? It means, see how it kind of grinds down the low of this channel, right? So it kind of grinds down the low of that channel. That's a beautiful example there, right, of a grind break. Oftentimes, when we see the market kind of grind down the low of that channel, what happens is we see the price come back for a trap. So let's keep an eye on that 7,100, 7,110, right? Basically all of these little levels of resistance waiting overhead. That's a beautiful example there of a grind break. I don't think that's the most important clue, right? But that obviously is another way to draw that channel, right? So you can see how using two different channels, right? Two different ways of drawing the channel, right? You get this one now. That tells me the grind break, right? But now bring back those lows again, right? Bring back those lows again, and now look. See, now we can combine that grind break, that grind break trap high, if I can speak my English here today, right? Along with that hidden channel coming off of that high, right? So we're combining two different channels. That gives us two different areas of resistance that are both right in the same spot, right? Very, very interesting how we can kind of combine these, right? These two trading strategies, or combining our analysis, right, to really put together a nice rock solid plan for tomorrow. So without sounding too much like a broken record, you know, the S&P looks very, very similar to this, although it was a very different scenario overall. We're still looking for the price to go up and then back down again. So what if price goes up? What if price goes down? What if price goes sideways? I'm glad you asked. Up for that trap high into a failure. Again, failure at the moving average. And then, of course, failure into strength. Why do failures turn into strength? Because when buyers fail, they get stopped out. How do you get stopped out? You sell. At that point, sellers are selling and the buyers are selling. Does that make sense? Right? When the buyers get stopped out at resistance levels overhead, then we have the buyers become sellers. But remember, the sellers are selling up here too, because, right, we're bearish at resistance. So that's why failures produce such great strength, because those sellers are selling, but now the buyers are selling as well. That strength, of course, right, brings the moving average down, and I love that last opportunity right off of that moving average pullback. So three different opportunities there if we can get that market to go higher. What if it goes right? What if it goes lower here? What if we come out tomorrow and we just see this market going sideways here? Yeah, that could easily happen. It could easily happen. What do we look for? Two try rule, right? Buyers once, buyers twice. Once they try that second time, yep, wait for the turn and then sell that sucker back down again. What else do we have here? As we go lower, right? What if we keep going lower here? What if we keep grinding lower here? Well, see, now we get some good distance here to that, right, to that measured move. But remember, we still have that grind break, right? So if we do keep going lower, that means we really want to stay patient, get up, right? Get up and sell back down. That's where the most reliable, I don't want to say easy money, but that's where the dependable money is going to be, right? I'm not going to say that's where the easy money is, because the easy money is oftentimes with breakouts, but we know breakouts are not reliable money, right? There's a big difference there. I would take reliable money every day of the week over easy money. because I can depend on it, right? I can pay my mortgage with reliable money, right? Quick money, easy come, easy go. The problem is if you make money fast, you'll usually lose it fast. And if you haven't learned that lesson yet, you just wait a minute. You probably will learn that lesson eventually in your trading career, right? My biggest, worst losses early in my career came only hours after my biggest, easiest winners. No joke. Had my biggest day on a Monday and my worst day on a Wednesday one week. I'll never forget it. Easy come, easy go. I don't want the easy money. I want the reliable money, right? The reliable money strategy. That's what you want, right? It's all about longevity. Can you survive those times when the markets aren't performing well? Easy money won't survive those types of environments. All right, so now we know up, down, sideways, and how do we reverse? Yeah, right? Strength, pullback, strength, right? And again, this is not done to scale, right? So this could easily be a strong move up, a pullback to the moving average, and a strong move there. That will work. Okay, it doesn't need to be this big move higher. Just want some strength, right? I want to see there's clearly a purpose as it goes higher. But the real thing, right? The real volume, the real clue here is going to be how the second leg works, right? How that second leg works. For example, right? Look back up here. That was a good strong move higher, but you notice they couldn't hold the pullback. Right? Same thing here. Strong move higher, but they couldn't hold the pullback, right? So until they can hold that pullback, there's no waste. Don't waste your time trying to be a buyer. You focus on that buyer failure, right? So up, buyer failure, back down, right? But we go up and those buyers hold. Whoa, watch out, right? Now we've got sellers who are going to be hitting the exit button, right? That's going to cause more buyers in the market. We're going to grab that hidden channel. This is where you got to be a little bit aggressive, right? And grab that pullback, right? It takes discipline to wait for the proof, but then you're going to take off that discipline and then put on aggressive hat and jump in on that pullback because it might not pull back at all on the way back up to retest that high, right? So you got to be kind of a little aggressive once that thing reverses, because if it reverses, all the bears in the market, they're going to get the heck out of their positions, and that's going to throw gasoline on that fire, right, going higher. All right, guys, watch that big round number tomorrow for a nice big target. Should be a good day tomorrow on the E-minis. How about some gold now? How about some gold? What an interesting chart here tonight. What an interesting chart here tonight on the gold. Gold is bullish and retesting a spike and channel high from earlier in today's session. The bulls had clear control, but this move back to the highs appears quite exhausted right now, telling me that buyers will continue to be looking for buying opportunities, but at lower prices tomorrow. Now, I've told you this a lot of times on this nightly newsletter. Many times I've said this. You have to listen to the story, right? You have to listen to the story being told, right? How many times have I said that on this nightly newsletter, right? Listen to the story. What I mean by that is that, for example, do you start a movie 2 hours into the movie, or these days an hour into the movie, right? They don't really do movies that long anymore, do they? But would you go to a movie theater and purposely watch a movie halfway through the movie? No. Would you read your favorite mystery novel, right, 100 pages into the novel? Probably not, right? Most of us would probably begin reading that novel or watching a movie at the beginning. Why? Because you need to know what the plot is. You got to know who's the killer or who you think the killer is, right? You understand what's happening, right? If you miss the first hour of the book or the movie, you're going to be lost the rest of the movie, okay? Okay, so we get that idea. So this is why you don't just want to sit down and go, oh, look, here we are, trade it, right? You don't want to sit down and say, oh, look, let's just trade this right now. We don't want to get this tunnel vision where all we look at is we are right now. We're definitely bullish, right? No doubt about that. But it's the story being told. So let's go over the story quickly here on gold, because if you learn one thing about tonight's newsletter, it's grind breaks, it's hidden channels. I know there's probably more than one thing to learn tonight, but one thing I hope you'll really take away is to learn to slow down and interpret the story. See, I begin my day every morning around 8 o'clock Eastern time, right? I start my day right about here, right? So I have the ability to go back and interpret what happened overnight, okay? Whatever time you start your day at, go back and look a few hours earlier and try to listen to the story being told. Okay, so for example, right, when I came out this morning, right? We saw the bears, right, getting crushed, right, going lower. But then we had that big CPI number this morning, right? Remember that from last night's newsletter, that inflation number. And that inflation number, right, sent prices screaming higher into a spike and channel, right? Screaming higher into a spike and channel. Now, if you watch this newsletter or if you're a client of mine, you know what do spike and channels tell you, right? They tell you buy the dip, right? Wait for the dip, right? And buy it going back up into the range, right? Pull back, retest the high. We also know that a spike and channel gives us a measured move target by connecting all the dots. So if I listen to the story, bears had control. They lost control clearly through news. Spike and channel, buy the dip, back up to retest the high. But now, where are we right now? If I asked you, right, if I said, hey, where did gold end the day today? What would you tell me? Would you say gold ended the day today at 1326.5? Not if you're a real trader, you won't. If you're a real trader, you'll say gold ended the day today retesting its highs. That's a big difference, right? If I say it that way, if I say gold finished the day today retesting its spike and channel high, well, that leads me to believe now that we've now completed the objective, but we're at the objective. We are where the buyers wanted to go. What does that tell me? It tells me I should not be buying here right now. Buying right now, you missed the opportunity down here, right? Buying right now, I just completed the objective of that move. Okay, this is why it's so important, because I don't want to buy this pullback, right? So why is this important? How does this help you make money tomorrow? It helps you make money tomorrow ultimately by keeping the money you've already made. Because by knowing the story the market's telling us, right? The bull spike and channel, the deep pullback, trap low, right? The failure, right? The failure back at the moving average, strength, pull back and retest the high. By knowing that we just completed all of that, I don't want anything to do with buying here now. We are now where I should have been taking profit, okay? That puts this all in context now, okay? Now you don't just see the tree, you see where the tree is in the forest, okay? So listen to the market story. This is why indicators are so toxic for new traders, because too many new traders get told, just look at the indicator right here, right? You're going to have a very difficult time in your trading career if you get in that tunnel vision and just look at your indicators. This is one of the biggest reasons why the best thing I ever did in my trading career was get all the indicators off there, because it required me, right? It kind of pushed me in the deep end, out of my comfort zone, and forced me to really understand what the story is, what the context is, because that's where the real money, that's where the consistent, the reliable money is made in the long term, right? Not relying on indicators, but relying on knowing we are back retesting the high from earlier today. Don't just tell me the market closed at 26.5, right? We're closing right back up to retest that spike and channel high. So now we have to look for one of two things, either rejection or acceptance. In other words, do we see the market go higher, telling us we're trying to go back to that measured move, or do we see the market pull back, telling us the buyers are done buying and to look for buying at a lower price? Those are ultimately the two decisions now, or the two clues we need to wait for after we see the market retest its high. We're where we want it to go, right? Victory for the bulls. Now, give me some more information, right? We're sitting right back up at that high right now, and it doesn't look like these buyers are too eager to buy more. So, two scenarios to watch for tomorrow. First scenario, we go lower. Buyers come in at lower prices. Second scenario, we go higher. That gives me proof the buyers are looking for higher prices. Where are they likely going? They're likely going up to that measured move. That's the next objective. Okay, so how do we plan this? Let's do it. Price goes lower, you know what I'm going to say, right? Look at the same pattern we saw here. Same stuff over and over again. Strong move down, let those bears try to chase it. Failure, strength, pullback, back up we go. Right? If I can get a nice strong move down, what that will do is it'll give buyers a reason to get in again, and it will also give the sellers a reason to think it's a bear market. And if that bear market, or if those sellers, when they try to sell that pullback to the moving average, you know what happens if they're wrong, right? Look what happened back here when the bears tried to reverse the trend. Explosive move going back higher. That's why failures often lead to strength. That strength then gives us that easy way now, right, to buy that pullback. That's the plan if price goes lower. If price goes higher, we got to be careful. First, draw that line across the top. Second, strong move up. How strong? How strong is strong? Good question. Strong enough to get that moving average up above the high. Okay, that's my rule I like to use. It allows me to have a black and white rule to use. Because when I say I need to see a strong move higher, you should say, how strong, Joe, right? How strong is it? I mean, strong is it's a very loose word, right? You got to make sure you make that more black and white. Okay, so make that now up, two-legged pullback, back down we go, buy at that support level. Okay, maybe we get a chance to use the top of that spike and channel, right? Moving average, etc., etc. Okay, measured move becomes the target. Remember, if we do it the measured move, don't forget, most measured moves, two-legged pullback, and do it again, right? So even if for some reason, let's say for some reason overnight, right, price jumps up to that measured move. Okay, you come in tomorrow morning, we're already there. Don't worry, two-legged pullback, do it again, right? It happens over and over and over again. Okay, so we know the plan, right? Lower, back up, or up, pull back, and go from there. Okay, but right now though, not a good idea to be spending, not a good idea to be spending bullets right here. Yeah, you're right. Maybe it does go higher, but the odds aren't as high. The odds aren't high enough yet to make the decision. I want to be focused on buying at support levels below, right, or buying at support after seeing proof of a new higher high. How do we reverse? Boy, what a great example today. Look at the strong move down. Did they hold the pullback though? They didn't. No, and they didn't. That's exactly what I'm talking about when I say they've got to hold the pullback. Strong move down, moving average comes over. They've got to hold that pullback if I'm going to take them seriously. And if they do, perfect, right? If they do hold the pullback, good for them, right? I don't care what direction I trade in. Don't get married to one side, guys, right? If the market reverses, right, no, don't get upset. Say, okay, this is now an opportunity here now for me to flex my knowledge muscles and let's sell off that hidden channel. Oftentimes, by the way, guys, oftentimes reversals, and I'm not talking about trading the reversal. Okay, that's the fast money. I want the reliable money, right? Remember, we're not going after fast money here. We're professionals. Professionals don't take shortcuts to the right way, the long term, the reliable way, right? The fast money is the reversal. I'm not trying to predict which one's going to get lucky. I want to wait for the reversal and then sell, right, that proven strategy, that reliable strategy, right, using that, right, that hidden channel. So good example there on the gold, and a very good example of why you have to know how to interpret the story. Now, if you want a great lesson on that, go into our intermediate course, right? Our intermediate course is a great chapter on what I call the price action cycle, right? And that chapter dives into what I basically call the story, right? The nickname I give it here is called the story the market's telling us, right? Listen to what the story is, because the story will tell you where the next trade's going to be, right? You got to know that story. All right, let's keep going. How about some euro? Euro is bullish with channel, probably the easiest of all the charts tonight. Euro is bullish with channel, which tells me to look for buying opportunities down at the low of that channel tomorrow morning. Knowing this, price will likely be below the moving average when it pulls back. So be prepared for that. My plan is to look for bear traps and seller failures for buying opportunities going back up to retest that high. As you can see here right now, I've got these highs connected. Connect those highs, right? Bring it up off that low, and that gives me a beautiful opportunity there. You'll also notice this big strong move higher here, right, where the bulls took control this morning. That gave you an opportunity here by connecting those highs, right? I mean, that gave you a gorgeous buying opportunity earlier this morning as well, right? So there was definitely opportunities earlier in the day today. I would like to piggyback off of this trend line and this trend line somewhere in this area here tomorrow. Maybe, of course, we can use this trend line coming down here as well. I'm drawing that trend line down overhead, so maybe we get a chance to go in, back up off that trend line, right, and get a buy off of that low. We also have one leg 2 legs, 3 legs. How convenient there for that triple measured move. We just talked about measured moves on the gold chart. What do we usually see after a measured move? You got it, 2-legged pullback, retest of that high, right? Absolutely, right? So 2-legged pullback, retest of that measured move. That's what I'm looking for tomorrow. Let's see here. I almost missed this. There's one more swing right there as well. So depending on kind of when this happens, that will tell us what levels we need to use. So up, down, sideways. Let's go down first, right? Pull back lower, price goes lower, moving average comes over, failure, strength, pull back, right? And go from there. Easy, 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 right? We get, of course, the pullback to that trend line, the failure off the moving average, and, of course, the pullback to the moving average, right? Those will all 3 of those be opportunities there, right, for buys going back up to retest that high. What if we go sideways here? You know, wouldn't surprise me. Wouldn't surprise me. Euro has been a little bit sluggish lately, so it wouldn't surprise me if we do go sideways here for a few hours here overnight. If that's the case, nothing really changes. We still look for that 1 try, 2 try, down to an area of support. Again, you know, we got that support level coming in, right? So we made a chance to buy off that support level right below the low of that range if we start seeing it go sideways there for tomorrow. And what if we keep going higher here? If we keep going higher, not much changes, right? If we keep going higher, we're still looking for a pullback. I'm still looking for the reliable money, right? Not the easy money. I want the reliable money here. Again, the easy money would be trying to gamble up here and try to find which one of these is going to break out here. That's the easy money. I don't want the easy money. They don't have a reliable, the probabilities are not as high on the easy money. I want the reliable money, right? I want to pull back here into these areas of support and buy at support, even if this market keeps going higher here tomorrow, right? And if it does keep going higher here tomorrow, the objective on that will be another measured leg, right? So you can definitely anticipate where that leg will be depending on how far the pullback happens. Okay, so that would be your next target here. So if we just happen to go higher here, just out the gate here, if we don't pull back any further, right, then we now know, right, that measured move right there, right, that'll be your target, right? But if we pull back a lot deeper though, right, if we pull back down below that channel, right, now that measured move's a lot lower. Right, so that becomes a little bit different animal now because we can use that up towards the top of that channel as a target. So there's a lot of different ways we can use this measured move. If we're done pulling back right now, the measured move is quite high. If we pull back towards the end of that, right, towards the end of that channel, then all of a sudden now that measured move becomes a nice, tasty, right, little target there for those buyers, right, near the high of that channel. So keep an eye on that for your runners here tomorrow. Last but not least, how do we reverse? Yeah, same thing, right? Strength, pullback, strength. Want to see it get back below the moving average, hold the pullback, find that channel, sell that channel high. Again, it'll usually be somewhere between that low and around the high of that channel. Look for that sell back down. The target now for those sellers be all the way back down, just shy of that 22,800 area. That's a nice big move down, right? If those bears can take control for tomorrow's session. Boy, what a lot of information we've covered here today. I mean, what didn't we cover, right? We talked about reliable money versus the easy money. We talked about the grind break. We talked about hidden channels, measured moves, listening to the story the market's telling us. Boy, I hope you learned a ton here tonight in the newsletter. I hope you'll subscribe to my YouTube channel so you can keep learning with me every evening. I hope you share the video with other trading friends as well so they can learn as well, right? And also, too, if you like my newsletter, you're going to love being a client of mine, right? I am not even giving away the good stuff here in our free nightly newsletter, right? I save the real good stuff, right, for our members here at School of Trade. I'll give you a glimpse behind the scenes here. Grab that free trial. I'm going to teach you more about the actual short-term strategy that we use in our trade room. Join that free trial on the homepage at schooloftrade.com. I'll put all the links in the description of that YouTube video. And while you're here, don't forget to check out our beginner, intermediate, and advanced levels of membership. You can always start as a beginner. Everything credits up the food chain, right? So as a beginner, you start as a beginner, upgrade to your intermediate. It'll always credit towards your intermediate, graduate from the intermediate, and then upgrade to your advanced. The advanced package is all inclusive. You can learn more about it on our website. And then don't forget, if you have any questions about membership, you can post them in the comment section below, or you can always hit me up on live support. I'm always here to answer all of your questions whether it be trading questions, membership questions, right, whatever the question might be along the way. Guys, my name is Joseph. Excellent work today. Great week so far. Don't forget tomorrow, inventory day on oil. We'll see you guys tomorrow, 8 o'clock Eastern time. If we don't see you there tomorrow morning, we'll do it again, same time, same place tomorrow evening. Be well out there. Be nice to each other, will you? And be here next time. Adios, amigos. Bye-bye for now.